Okay, and Khalid, this is where I'm going to start to nail it in. All right, so Khalid has a problem. It's called overtrading. Okay, and Khalid's not the only one with this problem. I've got this problem, and I can guarantee you there's many traders that are successful on this trading floor that have that problem as well. Okay, so what we do is we take the problem, i.e. overtrading. Now we want to get to an end outcome, which is we want to stop overtrading. Okay, now the problem and the mistake that most individuals will make is they'll say, okay, in order for me to stop overtrading, I'm going to put a rule in place. Okay, and that rule is that I'll only trade between the hours of this and this, and I'll only trade these kind of markets when this strategy exists. So they put in place rules, barriers. Okay, now the biggest mistake with this is that yes, those barriers will have a short-term result, i.e. if you follow those rules and you're disciplined enough, of course you're naturally going to trade less. Why? Because you've put in place specific rules that'll make you trade less. But the question to answer is, are you actually overcoming the problem in the first place? Okay, now most of you are saying, no, of course you're not. Okay, you're just putting a barrier in place that's avoiding, that's almost making you avoid making the mistake. Okay, so you're not solving the problem, you're just creating a short-term solution. Now, what you need to do, and this is what the whole concept and theory behind marginal gains works, is you need to take this big problem, this big thing called overtrading, and you need to break it down into its elements. So let's look at it, and I'm going to, Khalid, I don't know what your elements are, but I'm going to give you a few of my personal elements so we can kind of, make this personal. Okay, so I know one of my biggest issues and one of the biggest reasons I overtrade is a lack of preparation. Okay, now with this exercise, guys, you have to be particularly honest with yourself. Okay, I'm going to rub out these three so I can make some space here. So the first thing is I overtrade because of a lack of preparation. Okay, and that's the honest truth, guys. I promise you. I know I preach to you guys saying you got to do debriefs, you got to be ready. I know I'm a professional trader and it's my job to be ready, but sometimes I don't prepare properly. Okay, that's the truth. So, lack of preparation, number one. Okay, number two, impulsive. So the guy behind me, he trades the Bund. He's like, oh, did you see that level? There's this level in the Bund and la la la. And the next thing I'm clicking and I'm impulsive. Okay, I'm not trading a plan. I'm just impulsive. So that's another reason for overtrading. Okay, another reason for overtrading, too much noise. Okay, what do I mean by noise? Well, i.e., if I've got 10 different charts up on my screen and I've got 10 different markets up on my screen, guess what a natural result's going to be when one of them moves? Okay, I'm going to be distracted, the noise is going to draw me in, and guess what? I'm going to overtrade. Okay, so I've got too much noise, too many markets, too many whatever it might be. Okay, and another reason for overtrading, okay, is, let's just say, a lack of trust. Okay, now what do I mean by lack of trust? Well, for me as a trader, I have a firm belief and a philosophy that every single day the market will offer you one unique trade opportunity that you understand and that you can make good money out of. One, at least, minimum. Okay, that's not just a philosophy that I've made up. It's a philosophy I've learned through having done this job for 6-7 years now. Okay, through observing every day, every single day, I write down all the tradable opportunities, and on average, there'll always be one. Okay, so those are the 4 reasons. Number 1, number 2, number 3, number 4 reasons that I overtrade. Now, what you go and do is you try and enforce a process to make marginal gains on each one of these, one at a time. Okay, so how the theory works is that if I can become 5% better at improving my preparation and 5% better at becoming less impulsive, i.e. with the noise, and maybe remove 5% of my charts and ladders, and maybe spend 5% more time reading through my underlying philosophy. If I do all of those by 5%, okay, ultimately what should happen is my inability or my failure through overtrading should reduce. Okay? And that's the concept. It's about not trying to improve your overtrading by 20%, rather improving on the little things by marginal increments so that the big thing ultimately improves by a significant amount. That's the concept of marginal gains. Now let's take it a step further, Kili, because this brings us to point number 4, which is the concept of trial and error. Now, the first mistake a lot of people are going to make is they're going to say, okay, cool, Brannigan said go get rid of the charts, we don't want 9 markets, you don't want 9 ladders. If I do that, I'm going to become 5% better. It doesn't work like that. It's not that straightforward. It's not that simple. You have to go through a process of what we call trial and error. Okay, and this brings me to the last principle for today. In other words, I go through each one of these smaller problems, okay, and I find a number of processes, a number of ways to trial every little tweak I make. So let's come back to the example of too much noise, and let's start here. Okay, so the first thing I can try is, and I'm gonna erase this so you make a note here. Okay, so the first thing I can try is ultimately trade with headphones on. Okay? Now you're going to say, that's crazy, why would you trade with headphones? Well, because if I'm trading with headphones, right, I'm not hearing maybe someone else calling out a level, calling out a market, which means I'm not going to bring up that market, I'm not going to suddenly look at another ladder, and I'm not going to get dragged into it. Okay? So I trial that out, and I say, okay, let's see what happens. So I try it for 7 days, okay? And I get to an end process, okay? And the process will be X or Y. More importantly, I need to then also trial out for 7 days what we call a control group, okay? Scientists call it a control group, which is nothing other than, let me stick to exactly what I was doing and see what happens relative to those 7 days when I had the headphones on. And we do that for something else. So we say to ourselves, well, let's have a maximum, okay, of 4 markets. So 4 markets, 4 charts. That's the maximum, nothing else in front of me. And then we can say, have a maximum of 3 screens. Okay, sometimes there's a real underlying idea that more screens equals more money. It doesn't actually. Sometimes more screens is more problems, it's more noise. Okay, and I go through a number of different solutions that I can trial and error. Now again, guys, this list should be completely, there should be as many as you can think of. Because what you want to try and do through every one of these is ultimately, if you make a 1% gain there, doing that, and a 2% gain there, and another 2% gain there, well then guess what? You've suddenly made 5%, which is improving the too much noise problem by 5%. Okay, and every time you add something, you're adding more and more marginal gain to the ultimate objective. Okay. So where does that drive this whole concept, Khalid? Okay, how does that answer your question? Well, it's very simple. Okay, I can't give you a process. I can't tell you, Khalid, you know, if you just trade less markets, or maybe you tell your risk manager to give you less limits. I can't tell you that's going to be the solution for you, because guess what? It won't. This is a personal game. What I can tell you is if you are willing to be honest with yourself and open with yourself and go and write down exactly what it is that's one, costing you money, and then breaking it down into its smaller elements, and then from there finding little solutions, as many as you can, little trial and error solutions. If you do that, not only will you become a lot more consistent and a much better trader, but my goodness, you'll become a lot wiser for it. Because guess what? If you do this and it works, there are other traders that will have the exact same issue as you. And that experience, that wisdom that you've gained from adopting a trial and error process to ultimately becoming better, that process, I mean, guys, I mean, it's not just in trading. I know, you know, we associate everything with making money, but my goodness, if you're able to achieve that sort of a philosophy in your trading and life, you will just, the marginal gains will be incredibly big in the long run. And that's what it boils down to, guys. That's what everything in life is about. Okay, I know we're associated with trading, but ultimately we always want to be better versions of ourselves. But it starts right at the beginning, which is we've got to accept failure. We've got to accept our weaknesses. Okay, I think one of the biggest breakthroughs I've had this year as a human being and a trader is that this job, trading, reinforces probably the worst habits within us. Why? Because the moment I click and I make $500, what am I going to do instinctively? Am I ever going to consider what I've just done ever again? 100% no. Why would I? Okay? If I've just had my best ever day, yeah, I might spend 20 minutes looking over it, smiling, being happy within myself and saying, okay, well, I just made 10K. But ultimately, what am I going to achieve out of all of that? Okay? And the simple answer is nothing. Why? Because trading reinforces the bad habit, which is we don't look within ourselves. And that's the crux of it. If you want to be a good trader, you're going to have to start accepting the philosophy of looking at your failures, looking at your weaknesses, looking at your winners as well, and working upon them.